In the last video, we built the income statement and we calculated net income, but that raises a critical question. Where does that number actually go? Because it doesn't just sit there, it becomes part of your financial position. And to make that happen, we need to close the books. Right now, our system has a problem. Our revenue and expense accounts still have balances, but these are temporary accounts. They belong to this period only. They shouldn't carry forward into the next one. So we need to clear them out and move their value into equity. To do this, we're going to create a new tab, Closing Journal. This is where we record end of period entries that zero out revenues, zero out expenses, and transfer the result into equity. We'll use a temporary account called Income Summary. Let's go into our Excel spreadsheet and show how this happens. All right, so the first thing that we need to do is, well, the first thing that I need to do is I need to make this screen a little bit bigger. So we'll do that. And what we can see here is our chart of accounts. Okay, we need to start here and update this before we do anything else. And the reason we need to update it is because we need to add our income summary accounts. Now, you may ask what kind of account, what type is it, what subtype is it? And it is an account that belongs in equity. So we're just going to insert the row here. Typically, the number associated with income summary is 3,999. And that's good. It's a good account to use because it's the last account in equity. It's the last one that gets used during the account closing process and only for the account closing process. So income summary is the name, equity is the type, and we can say, temporary or closing as the subtype. It doesn't really matter as long as we're doing this procedure correctly. Okay, so we have that now in our chart of accounts. Now what we want to do is we want to create a journal, and we're going to rename this one Close Journal. And we want to keep the format of this the same as our other journal. So we go over to our other journal, and we're just going to copy these first two. Actually, I'm going to copy the first three rows, okay? And you'll see why in a second. Okay, so just have to take a second here to format all of these so that so you can see all of the information there. Now we want to change this opening balances bit to closing entries. And all of these closing entries are going to be done, according to this example, April 30th, 2026. Okay. So the first thing that we want to do is we want to make sure that we format this the same way as our other journal. And that means that we have to validate use the data validation to be sure that we can only choose those that are in our chart of accounts. Okay, so I would just like to hold shift, hold down control, and select all of these. That way, anything that you put in here, no matter how long, it's going to be captured. We're going to do the data validation. We're going to convert these into lists and equals accounts. Okay, so that allows us to only select those entries that are in our accounts, in our chart of accounts. Okay, so that structure is set up correctly. Now we just want to go through and we want to close off these income statement accounts. So the first one that we want to close off, if we go to our GL, we'll see that the first one that has a balance, or you could go to your personal income statement, it doesn't really matter. You see here employment income. So employment income, remember, it had a credit balance So now we want to debit the employment income, and we're going to credit our income summary. Okay. And the amount of this is going to be the same amount that was captured in here, which is our 5,000. Okay. Next, we're going to do the same thing for the next account, which is our side income for 400. So side income, income summary, 400. Okay. Now what we're going to do is we're going to go through and we're going to close off all of our expense accounts. Now, I'm going to speed up this video during this period of time so that you can see sort of how I've done this. But essentially, all of the values here are going to be imported here. So I'm just going to use equals. I'm going to choose the first expense there, and I'm just going to pull this down. And I think that the last one is, yeah, 74.96. So I want to remove these two. And all of these are going to be debited to income summary. Income summary. And so now is where I'm going to speed it up, and then you'll see all of these credits for the expense accounts. Okay, so we have all of the different entries here, and now our income summary will be sitting with a balance that is the difference between all of the credits here and, pardon me, all of the credits here and all of the debits here. So now what we want to do is we want to create another GL that is identical to the first one. The difference being is that now we're going to include these journal entries in that closing GL. So we're going to call this one close. Oh, we're going to call this one close GL. And again, we want it to follow the same format as our first one. So just copy and paste. All right. And we want to also have all of the different accounts here. Now, notice that when we added that income summary, it didn't show up here. That's fine. We just have to remember to include it when we do this. So we're going to copy all of these, and we're going to put this to our general ledger. And we can actually call this one close general ledger. All right. So our debits, our credits, our balance, our adjusted balance. What do we do here? Well, we want to keep the same format as in our other one. It's just that we're going to add these journal entries here. So actually what we can do is we can just copy all of these into here. Okay. And looks like it doesn't want to format there. So we have all of the balances from pre-close. Now what we want to do is we want to adjust these to reflect these other journal entries that we've made. Now, what's going to happen here is we also have to add that income. Okay, so the income summary, we want to insert the row above, 3999, income summary. And Because we're doing this for our revenue and our expense accounts, we don't need to change anything with our assets and liabilities. The only change with the equity is going to be here. And if you can remember, um, we could just pull these values down to be able to capture everything into our income summary section here. Okay, and B16 from the GL. Yeah, we don't want to do that because it's just copying and pasting the next one. Okay, so remove this. So how did we get the debit total before? This income summary is a good place for us to start. Remember, we wanted to sum if S. And what did we want to sum? We wanted to sum this column here in our closed journal. Okay, so this column here, if the value in our debit account was equal to the income summary. Okay, so we have our income summary equal to 3,649.96. That should look familiar because that was the value of our expenses, our total expenses here. Okay, next we want to do it to the credit side. So equal sum if S. We want to sum in our closing journal everything in column E if the word in column D is equal to income summary. Okay, and there's the 5,400, which is the value of our total income for the period. Okay, so now we can do what we've done before, which is subtract the debits from the credits. This one will typically have a credit value, and so we have to multiply this by the -1. So its credit value is this 1,750. Okay. Next, what we want to do is we want to keep these here, but we want to add another sum if. So in other words, we want to add up all of the journal entries that occur in our pre-closing journal to the ones that occurred in our post-closing journal. Okay, so we don't want to change anything here, but what we want to do is we want to add a sum ifs formula. We're going to use our closed journal. We're going to use the amount column. We're going to use the debit column. And we're going to go back here to the actual name. Okay. And you can see here that this now zeroes out the balance. Okay. So let's do that for the next one. And it also zeroes out the balance. Okay. And actually, what we want to do is we just want to do that completely for all of the debits. Now, these numbers didn't change. And the reason is that there weren't any debits with the name of the accounts in our closing entries. That's why we have to go over to this side, okay, for our credits, and we do the same thing. So keep the original pre-close journal and add the sum ifs function. What do we want to sum? We want to sum anything that's in column E. If it's in the credit column and it equals the account type that we're looking at. So in this case, it's the employment income. Okay. Nothing changed there because there weren't any credits of employment income in our closing journal. Again, we drag this down and all of these should then be zeroed out. Okay. So what we've effectively done here is we've closed all of the revenue and all of the expense accounts to income summary. Okay, so that's step number one. All right, so we've got the net income in our closed GL, or rather our income summary representing the net income, but we're not done. This is just a temporary account. We actually want this value to be combined with our equity. Okay, so what we're going to do here is we are going to add the income summary to the equity account, and we do that through the journal. So the reason we have this temporary account is because we need to see, okay, was this a larger credit balance or was this a larger debit balance? If it's a credit balance, then we're going to need to debit it. If it's a debit balance, then we're going to need to credit it. How would it be a debit balance? Well, it'd be a debit balance if our expenses were more than our income. In this case, the income is bigger than the expenses, which is what we want to see. And so we've got to clear this out by debiting it for this value. So we go to our closed journal and we're going to debit our income summary. And we're going to credit our equity account. So equity, okay? We don't have a net income account or anything like that. We're just moving it directly from income into our equity, okay? Now the value here is the value that we've calculated, which is our, it looks like 1750 and 4 cents, okay? So we can just grab this from here. 1750, 1750, and I think it was 4 cents. Okay. There, and that's gone. But now we have to update the equity because up to this point, it only captures anything that's in our pre-close journal. So again, we want to add the sum ifs formula for both sides. So the first case, it's the debits. Debit column is equal to equity. Okay, nothing changed there. The change is going to be in the credit column. So plus sum ifs this value, credit column, equity. There we go. So now we have our new equity, which is the 2,155 and 4 cents. So at the end of this period, our equity increased from what it was at the beginning. And at the beginning, it was recorded in our journal as an opening entry. Okay, so we would have had equity balance transfers here. Okay, the difference between the assets and the liabilities gave us our beginning equity balance. Now that we've closed out the books, we have our closing equity balance. All right, now what we need to do is we need to create our closed adjusted trial balance. So another tab, rename, close adjusted trial balance. Okay. And remember, our trial balance before, it had account, debits, and credits. So we're going to copy this and paste it here. Now the only accounts that we have left are these ones here. So the assets, the liabilities, and our equity accounts. So we want to just copy these ones over from our close GL. We're going to start with cash. We can copy that, move all the way down. We don't want to have our income summary or anything beyond that. Okay, these ones are all going to be 0. All right, and let me just make that a little bit bigger again so you can see it. Okay, now we're going to copy over the debits. So we'll start with the debits here for the adjusted balance for cash. And these ones are going to be all debits up to accumulated depreciation, but not including accumulated depreciation. Okay, then we're going to capture all of the credit side, accumulated depreciation, and onward. Okay, and then we can have our total. And if we've done everything correctly, then all of our debits should equal all of our credits. So we're going to sum that, captures everything, sum that, captures everything. Okay, and again, I'm just going to format these so that they're all in currency. All right, perfect. Now we are at the final stage of our net worth statement creation. So we can now create another tab. We can rename this to net, edit, rename, net worth statement. Okay, we'll add the title here, net worth statement. And this one's going to be for the period ending April 30th, 2026. Or you can just say for the period April 2026. Okay. Now the structure of a balance sheet is typically going to be assets, liabilities, and equity. And so everything that's in our assets section should equal everything that's in the liabilities plus the equity section. Okay, so I'm going to put assets there, and then I'm going to grab my first asset, which is cash. And I want 1, 2, 3, 4, 5, 6, 7. And I'll show how we deal with this when we get there. So I want 7 of these. So 1, 2, 3, 4, 5, 6, 7. Okay. Now, for vehicle, we got to make a slight adjustment here. We could, in fact, capture all of the different values. So I could just continue down here and I could use accumulated depreciation. But typically what you're going to see is the net amount. So this one deserves special treatment. We're just going to say net vehicle. Okay, and net vehicle, it just groups the vehicle and the accumulated depreciation together. So we're going to take cash all the way down from here to there. And then for our net vehicle, this one's going to equal the vehicle minus the accumulated depreciation. Okay, so total assets is equal to the sum of all of these values here. Okay, and again, I'll make this a little bit bigger. Next, we're on to liabilities. Liabilities equal the accounts payable is the first one. And there's 1, 2, 3, 4 under this. So 1, 2, 3, 4. And then we can just grab the values from here. So starting with 190. And we can just sum these ones up. And lastly, we have equity. And there's two different sources of equity here. The first one is going to be the actual equity that we've just calculated. So equals equity. And the second one is the CPP, the employer CPP contributions. Okay, so the first one we're going to grab from here, and we're going to drag that one down. And we have total equity, which is equal to, well, is the sum of those two above. Okay, so 2,455.04. Now we can do liabilities plus equity. Again, I'm using equity here. You could also use net worth. And if you use net worth, then just sort of use that throughout. This is going to equal the sum of total equity or total liabilities plus total equity. And we see here 24,925, 24,925. The net worth statement balances. Everything is good. And we'll just format that correctly. So the net worth statement, what does it tell us? It tells us our net worth or our total equity, and that value, the final value, is 2,455. So here's the key idea. The income statement measures performance. The closing process moves that performance into equity, and the balance sheet or the net worth statement captures the result. So net income is equal to our change in net worth. At this point, we've built everything: the income statement, the closing process, and the net worth statement. In the final video, we'll walk through the entire system from start to finish so you can see how every piece connects. I'll see you there.